Hello, everyone. Welcome back. Happy New Year. Happy new decade, 2020. We are glad to be back. This is Chander in Palo Alto.
And this is Arne in Oslo.
Any New Year resolutions, Arne?
No, I don't do any sorts of New Year resolutions this year or any other year. I'm just trying to figure out if this decade feels different than the last one.
Well, it's still new. You'll find out.
Exactly.
I don't do resolutions. I do yearly goals. So I did at the beginning of the year review of my 2019 goals. And every year I grade myself. And this year I got like a B-. So I was depressed for a day. So now look, I'm still deciding the goals for this year. Hopefully I do better than B-. Or no, I think I got a C. Yes, it was C, not B-. It was year before. So this year I hope to do better.
Good luck with that.
Thanks. So this is the official, beginning of season 2 of Valley Nordic. And this year in this season, we'll do 2 things differently. We'll try to be more structured in our conversation, which was a feedback we got from many of the listeners. And then second, we'll try to get more speakers or guest speakers. So you get other perspectives from Silicon Valley or from Norway. So let's get started. So today we'll cover 3 main things. One, what has happened in the last 2 months when we were offline, or almost 2 months. Then some highlights from CES. And third, what are we excited about in 2020 in terms of IPOs, tech trends, etc. And we finished the last season with, my observations about society in general for 2020, which, as promised, I wrote a blog post about. You can read that. But today we'll cover more tech trends. Yeah.
Yep.
Okay, so let's start with what has happened since, let's say, beginning of December until now. Arne, over to you.
Okay, so I think one of the things to talk about is that was a little bit of a recurring theme last year related to some of the companies we talked about was SoftBank. And once again, I think SoftBank is a theme, and it also has wider implications for what's going on in the market. So what's happened with SoftBank since we went off the air is that there've been a lot in the media, and it's sort of centered around sort of 3 main topics. One is that a number of their portfolio companies have had pretty massive layoffs, and a lot of those companies also then trying to find a way to profitability or much lower burn as quickly as possible. And this is everything from sort of 20% layoffs and that sort of thing, all the way down to de facto shutdown of companies or completely altercations of companies. And the last update on that is like Sumo Pizza, which was an investment where it's a company that's sort of raised $350 million altogether. Their business was producing pizzas robotically in a delivery van, and therefore having sort of a more or less autonomous, at least when the vehicles become autonomous fresh pizza delivery. That company has essentially laid off 80% of the people, are no longer a robotics pizza company, but a packaging company. And essentially it has ceased to be as the type of company it was. And that's just the last and long line of sort of massive layoffs in their portfolio. The second news around these guys was that there was an article saying these guys walk away from a lot of term sheets and this is viewed as bad practice pretty much everywhere, but particularly in the Valley, and sort of had people following that in the media being outraged about it. But it's also is sort of an indicator that there's less cash to go around for investment by walking away from term sheets, which leads to the third element of the story, which is essentially that there was a plan for another $100 billion fund, and that is certainly delayed. And the expectation in the market is that it will be much smaller, if at all, coming up. And so this is just a big big sort of fall down of sort of the most aggressive player in the market over the last 2 years, and a big change in the market, so to speak. And now all the other big VCs are sort of sharpening their knives and are not afraid to talk badly about SoftBank. So this is sort of at the mature end of the tech space. This is a big development. And it also sort of impacts the whole funding market around the unicorns and the large tech companies. And also there's a big trend in the market that following that saying, all right, we need to have much better gross margins, much better unit economics, and a clearer and faster path to profitability. So I'd say this is like big impact on the mature end of the tech market. And this is something that's developed since December until now, or really since the WeWork IPO fell down.
Yeah. Did anything surprise you in this?
Not sort of, it all seems to be fundamental and sound in many ways, but it's still a massive change for how the market has worked in the last couple of years. And it sort of has trickled down effects that to all elements of the market, even if I'm not personally exposed too much to that segment, but it just changes the thinking for all the players in the ecosystem.
Hmm. Okay, so that's SoftBank. You want to talk about Plaid acquisition by Visa?
Yeah, so this is sort of the good news in the market. The market is lively, and this is also the mature end of the market. Plaid is a API company for fintechs. So essentially, it's a way for fintech startups to use APIs to leverage information from existing banking and this sort of thing. It's a company that raised, I can't remember the exact number, but $200 and something million last year from Kleiner Perkins and a few others. And it was sold to Visa for $5.3 billion now in January. So this is sort of a perky point for the market, good returns, good multiple, although the revenues are not known because it's still a private company. It's believed to be running revenue about $150 million. So the multiple around 35x for the acquisition. And clearly fintech is a hot space, sort of API economy is a hot space. Mm-hmm. And so it's a development in the market that most players are happy to see. And I'd say there are also a sort of parallel in the Nordic ecosystem. There's I would call it the European Plaid, if you like. It's a Swedish company called Tink. That's sort of an open banking.
How do you spell that?
Tink. Yeah, so they do something similar to Plaid. Plaid is primarily a US company. Tink is primarily a European company. The tech is not entirely the same because Europe has a different regulatory framework with something called PSD2, which opens banking up to other players through APIs. So Tink sort of leverages that shift in the market. but in any way, it's still sort of very similar in the sense that it's API and Rails for fintech in Europe. Mm-hmm. They raised a 90 million euro round now in January. So sort of parallel development on the European/Nordic frontier. And for the Nordic market, obviously, it's a very big funding round. Also, good data point in the market.
Yeah, good. And Visa was actually one of the early investors in Plaid.
Yeah, and Visa even this is a big enough acquisition for Visa that they sort of have to explain to the market what they're doing. So they actually published a deck, sort of reasoning why they were buying Plaid. And for people interested in the fintech space, it's actually worthwhile. Actually, we can put out a link to that deck. Yeah. And it sort of shows the reasoning for Visa to buy it, and it contains some interesting data points on the big fintech companies in the space. Yeah. How many customers they have, yeah, and that sort of thing.
We'll add that to the notes.
Yeah.
Yep. Okay, then recently this week, something else happened related to Amazon CEO. I think you have investigated that more. Arne, you want to share what happened?
Oh, yes. This is an interesting story of wealthy people, power struggles globally, intrigue and sex. So this is a very interesting story. Jeff Bezos, the founder CEO of Amazon, last year had an altercation with the National Enquirer, which is a US tabloid, where they tried to blackmail him around his mistress, which also ultimately led him to divorce his wife and lose a share of Amazon. But it was even more so a political drama around Trump supporters and leaking personal information. Now, the new development in this story makes the story even more intricate. And it turns out that Jeff Bezos' phone was hacked, and was hacked through malware spread by the crown prince of Saudi Arabia, Mohammed bin Salman, which is an even more intricate story because so this is the power struggle here. Jeff Bezos is also the owner of the Washington Post. Yeah. And the journalist Khashoggi, who was a Saudi exile, was famously murdered in the embassy in Turkey last year by Saudi Arabian agents. Yeah. And this clearly was a attempt to silence the Washington Post. Subsequent, it led to this murder, and it turns out that the information the National Enquirer, at least speculation is, was leaked by the Saudi agencies to the National Enquirer. So it has these elements of intrigue.
Wow, I had no idea.
Yes, and to add to the whole story, the malware is seemingly supplied by an Israeli cybersecurity group called NSO Group that was famously portrayed in an episode of 60 Minutes last year. Their malware is weaponized malware that there's export restrictions on, and it's typically licensed to the FBI and these sort of law enforcement agencies. And very critically, by 60 Minutes, this software has been licensed to the Saudi authorities and was actually used to infiltrate the Khashoggi family before the murder. And it turns out that this has also been used for the hacking of Jeff Bezos. So this is like a too good to be true political thriller with tech angles to it. So I think there's a lot more to go to this story, and it's a little bit outside the startup tech ecosystem because of the tech angle and the excitement and political drama and everything. It's actually a story worth following, and clearly it shows the danger of security software or malware in the hands of the wrong people. And it's not a good look for the Saudi authorities or the Crown Prince.
Yeah, yeah. Wow. I didn't link, I saw the headline of that Bezos' phone was hacked, um, allegedly by MBS, but I didn't link that to the Khashoggi murder and all the previous leaking of Bezos. That's interesting.
Yeah, and if it even links into, the White House, where the favorite son-in-law is a good friend of the Saudi crown prince, and speculation is, of course, also that Saudis are essentially holding up the empire of that favorite son-in-law who's been underwater with a property in New York. So it has all the elements of intrigue and drama and all the wrong things about politics and where technologies were used for the wrong reasons.
Wow. So boundaries between tech and politics are blurring.
Absolutely.
Yeah, but a lot happened in the political world, but we won't get into that. But another business thing, which I just remembered happened, was the escape of Carlos Ghosn from Japan to
Yes.
Lebanon. Yeah, that I think was another drama in the business world. And those of you who don't know, Carlos Ghosn was the chairman, CEO of the alliance between Nissan and Renault. Nissan is a Japanese car manufacturer and Renault is a French car manufacturer. And he's been famous in the business world for having a global lifestyle, global CEO, going everywhere in private jets, etc. So he's under trial in Japan for some financial fraud or not reporting future earnings or something like that. Basically, Japanese authorities are investigating him. And he recently settled a case with SEC about some financial fraud or something he shouldn't be doing without admitting guilt or denying anything. And that basically that gives him, he cannot be a company officer in the US for a few years, I forget how many. But he was going to be, he was on bail. He wasn't allowed to talk to his wife or family members. So he hired some expert who is expert in getting people out of tricky situations. And they put him in some concert equipment box and dug holes in it. And somehow they got him out of Japan from Osaka airport through Turkey to Lebanon, where his wife lives and he has passport from that country. He has 3 citizenships, France, Brazil, and Lebanon. So currently he's in Lebanon, which doesn't have an extradition treaty with Japan. So we'll see what comes out of that.
Yeah, I famously saw a picture of a set of instrument cases, and the title underneath was Nissan board meeting.
And Yamaha, I think, which makes this equipment, did some ad, not people were apparently getting into these boxes and they were suggesting people don't do that because it may cause suffocation or some kind of harm. Yeah.
I noticed that one of the topics we're not going to do more of this year, at least not according to the headline, was gossip. But it seems that we're on the track for that a little bit. But there are interesting developments in the tech world, even if there's a lot of drama and gossip to it as well.
Yeah, well, we are, reporting how things are. We're not gossip. All this actually happened. So it may seem like gossip, but it's not. We are not speculating. This actually happened.
Yes.
Okay, so Moving to CES, which is the next thing we'll cover today. Both Arne and I did not go to CES, but I think Arne read more of what came out of there than I did. So Arne, why don't you tell us what you found interesting at CES?
Yeah, so in the tech world, CES is the way to start every year because it's like first week of January in Las Vegas. It's essentially the biggest show showing devices and things like that. It's not necessarily the most interesting show in the world because it's just halls and halls of battery packs and other accessories for mobile phones and so forth. At least it seems like that when you're there. But nevertheless, it is the place where a lot of manufacturers, present their new tech. From what I've sort of followed the headlines, there wasn't like a mad new set of technologies that you would never have thought about before. It seems to be very much sort of extension of what's already going on. A lot of new smartphones, generally with more cameras and more resolution on the cameras. That seems to be one of the main trends. Bigger TVs with smaller edges around them and larger resolution and generally OLED. So these are sort of continuations of existing trends, I would say. I'd say two other trends is more and more 5G. Number of manufacturers coming with foldable screens. So I think we should expect to see more of that out there. And then there are sort of the slightly less obvious trends where it's a little bit more off the beaten track. There seems to be a lot of companies providing sleep technology to the market. A lot of talk about sleep. So for the last few years, there's been a lot of things sort of monitoring solutions for your sleep. Whereas the solutions that are out this year seems to be more complete systems with feedback loops, measuring your sleep and adjusting something in your environment to increase your sleep quality. So self-adjusting mattresses with cooling and active masks for improving your sleep and this sort of thing. I don't know if any of this will truly catch on, but it was kind of interesting that so many people are bringing out sleep tech. I saw Samsung had like an interesting thing where they presented an AI project where they had like video chatbots that are completely AI based. So they're human-like, so close that they seem like humans, but they are indeed full AIs. And then there were like odd things like Hyundai and Uber partnering for urban air taxis. So flying I don't know cars. When they will exactly. So I don't think we should expect that this year, but there are like the more odd projects out there, even if they're not completely ready for the market, and of course a lot of electric vehicles and this sort of thing.
Something I found interesting, or what I remember of all the coverage I read, was how sometimes tech companies actually don't get human behavior or consumer preferences, or they understand the world wrong. So Samsung announced a TV which turns to portrait mode from a landscape mode. Normally you're watching TV in landscape mode because that's how the content is 16:9. But on the phone, a lot of the content now is especially for younger people. It's filmed in portrait mode and it's designed to be consumed in portrait mode because the younger people don't like turning the screen. That's like all the research has shown that why they don't want to watch in portrait mode. So and it's all short form content designed to be consumed on the phone. So now Samsung makes this TV, which has a motor additional cost that you can turn, to watch in portrait mode. I mean, the whole, idea of watching portrait mode on the phone is you don't have to turn. And they make a product where actually, so I just found it, I like Samsung. They're, good tech company. But sometimes they come up with these things like they have done no user research. But I found it entertaining. So I thought I'd mention it. Yeah.
Yeah.
Okay, let's move on to 2020. So let's start with what IPOs that are coming up.
Yeah. So if we take one step back, 2018 was a very good IPO year, but it had a clear slowdown in the second half, where starting with the WeWork failing, it essentially became a trickle, and eventually there was no IPOs like the last month or two. Now there is an expectation for a number of IPOs in 2020. The big one everyone's waiting for is Airbnb. Of course, there's a question whether it's an IPO or a direct listing, but that's a different story. At least they'll come to market.
It's still IPO.
But the market has, well, potato. It's at least going to market and will be listed.
Yeah.
At least that's the expectation, and I'm pretty sure it will. It's believed to be a very solid company, although probably not as profitable as some would hope. Anyway, the window seems to already being opening, and two companies have already filed for pretty big companies have filed for IPO, but they're sort of the lower end of the segment of the unicorn. And one might turn out not to be unicorn after all. It's sort of borderline. And those two companies are Casper, which is a direct-to-consumer company. We talked about that last year, the direct-to-consumer model. And so Casper is a mattress company for all practical purposes, although they named themselves as being in the sleeping economy. A small taste of WeWork dressing here.
Yeah, I remember, when I was with the box companies like Siemens or mainly Siemens, everybody wanted to be a solutions company. Oh, we don't make products, we make solutions. Oh, yeah. We don't sell mattresses, we provide sleep solutions.
Exactly. And as a point of reference from the S1, Casper says that the sleep economy worldwide is worth $432 billion. So, given that they're at a revenue of 411 million for the last 12 months, they say they've scratched 0.1% of the market they're going after. So it's kind of an interesting way of framing it. I'm not sure they believe in that number themselves, but and it's the cheeky way of putting it. But anyway, it's kind of interesting. The company is believed to be worth in the range of $1 billion. They were priced at 1.1 at the last private funding. The second company that's filed an S1 and is coming to market is a company called One Medical. It's essentially a primary care health company. They have medical centers around the US, and it's a membership-based service. But they also have like an app where you can do sort of self-diagnosis and self-help, and also you can get your GP on, or at least a GP on a video. So you can have your health consulting online instead of going to the medical center, at least if you've been to the medical center recently and so forth. That's a company believed to go to market about $2 billion. It's a company backed by Alphabet, and they're actually a big partner of Alphabet in that they have medical centers on Google campus and so forth. So the window is starting to open again. I have to say that both these two companies are sort of being bashed as they're coming to market, because both companies are, have a growth rate that is, good. It's double digits and more than that. It's sort of in the, depend on how you measure it, 20 to 40% year over year between the companies and what months you're looking at. But both of them are lower margin businesses. Both of them have like less than 50% gross margin, high acquisition cost, and also very high overheads in administration and other overheads. So none of them are close to being profitable. And given the sort of the way the market is turning, as I talked about around, SoftBank and what people are looking for, they seem to be having a harder time going to market, and a lot of people are being skeptical, and some of that skepticism is well founded in their numbers, so to speak.
Yeah.
So I think where the Plaid is sort of the good story, these two seem to be not the positive stories so far, although none of them are believed to become true disasters.
Yeah, if the expectations are tempered now and valuations come down, then they may not turn out to be disasters. I think the whole, what we did last year, and I think generally we saw that the unicorns that went IPO were overvalued. But fundamentally, they were not bad businesses. I think the businesses made sense. It's the valuation we had, issue with. And here, I haven't read their S1s, but based on what you're saying, they may turn out to be fine businesses in the long run, but valuation is the issue.
Well, I think there was a split in the market where some of the software as a service and cloud companies that went to market last year with very high gross margins have performed in the market afterwards. And I think this is one of the trends that I see when I look at what investors look at, what the media covering these days. Sort of the focus on unit economics are much bigger now. And unit economics, both in the sense that the gross margin, they're looking for high gross margin businesses like true technology companies, and secondarily, customer acquisition cost to lifetime value has to be high. And those are getting premiums in the market, and the ones that don't have that is struggling in the current market. And the second thing is that there's a much bigger skepticism about what is a technology company.
Yeah, I think that's like that could be a podcast, and we still won't cover what it is.
Online, exactly. It's a mattress company. It's not a tech company, right?
Yeah, you're looking at that way. I think in this decade, any company that doesn't become a tech company won't be around. Like, technology becomes the fundamental enabler of business, but what we used to say what tech company is a company that sells technology.
Right.
But now, you're selling mattresses and you're claiming you're a tech company because you're technology enabled. So that's, a stretch. But that all businesses will become tech enabled, and that those who don't won't be around for very long.
Yeah, this is true. But I think the market is pricing tech companies fundamental tech companies higher than the ones that are tech enabled, unless that tech enablement gives through scale and gross margins.
Yeah.
So there's a small sidetrack to this as well, which I guess also relates to the Nordics, and that is that I mentioned the Tink company. There's also another big funding round in the Nordics already in January, and that's a parallel to One Medical that I talked about here. It's a company called Kry, and they're a digital healthcare provider. So they're truly tech-enabled, but as opposed to having most of their revenues through medical center, all their revenue is by remote healthcare.
How do you spell that?
Kry.
Okay.
So the doctors are all online, which means that they are de facto more tech-enabled than those who work out of medical centers, and you can have a higher utilization and more efficiency and this sort of thing. And also the idea is that you have more data on your patients once you collect through this channel. So they raised $155 million in a Series C, led by Ontario Teachers Pension Plan, but a bunch of VCs also included.
No way, really? Wow.
Yeah.
Like a pension fund is funding a startup. That's big.
Absolutely. So whereas the signals in the global market are certainly mixed, the Nordics with these two big rounds already in January is off to a roaring start. And there's lots of positivity in the Nordic markets in general, but these are two of the biggest deals in January.
Yeah. And let me add quickly to this, then we go to the trends. When I say tech-enabled company, I think the company that's building the tech that is enabling their business, that's proprietary tech, that has bigger competitive advantage than, let's say, a company that's tech-enabled, but it's basically off-the-shelf tech. They're outsourcing everything from the other SaaS companies.
Yeah.
Okay, so now let's get to the trends we see in 2020 that, well, we don't know how much of that will actually happen, but what we are looking forward to. Yeah?
Yep.
So go ahead, Arne.
Well, I see that there's still tremendous capital availability in the market, but that all that capital is chasing the same winners, and that definition of winners becomes narrower and narrower, given this focus on unit economics and gross margins and definition of tech. And the second part of that is that because there's not that many to find where the capital has typically searched for it, I think this is good news for Europe. And we typically see that the big capital now is saying, well, Europe has been underserved, and let's find the nugget there. So while I don't think that the bulk of the capital still will go to Europe in 2020, I think it will be a larger share of that pie under the umbrella of still tremendous capital availability and focus on unit economics, gross margins, and narrower definition of tech.
Oh, we'll see. Okay, what else?
Let's see.
So I can say two things while you think. I think two big trends I see this year, which are worth observing. One is, expansion of AI or artificial intelligence into other domains or industries. So I think it'll continue to expand and get better. And it'll get into more domains, which is, where it's currently not present. That's one. Second, gene editing. So Casper, Cas9, I think there are many 30 plus startup in that domain. So I see more stuff happening in the gene editing domain this year. What that translates to, what are the products, we'll see. But these are the two big trends I see expanding this year. AI into other domains and more developments into or commercialization of gene editing.
Yeah, I see also a continued momentum in the software as a service and cloud space. And I see
That's still a trend. I thought that's like given now. It's
no, but it has big momentum. And what you see is that it used to be a small selection of companies that are growing really big, and that pool is now so big that you don't even know about many of these companies that are sort of passing the $50 million ARR mark and the $100 million ARR mark, and the business model around it just really works. Whilst of course, like AI is coming into play and is being a component of what you deliver and all of that, but that train just keeps rolling. And I see it gathering further steam in this year.
Yeah. So I was having a discussion with one of the other founders here at the Innovation House about, this year. So he's founder of Z Tractor, Bakur. So he sees, the trends that are helping him. So Z Tractor makes like totally autonomous tractors. You've heard of autonomous cars, so they make autonomous tractors. Because the sentiment is anti-immigration in the world, so there'll be less workers traveling or going to other countries for farming, and then also rise of minimum wage and benefits. So basically, there are less people available to work on farms, so that'll help companies like Z Tractor in getting more market share or getting in the market. So their plan is to be in market this year. So there will be like an autonomous tractor, fully autonomous, in market in 2020. So we'll see. Where would you put that? Ag tech, AI, robotics, cloud, it does everything.
Yeah, but I think it's about that fusion of technology where a number of technology trends sort of merge and becomes mature and productive, and that gives like system capabilities that have a lot of value.
Yeah. Okay. Any other trend you want to mention?
Not that I can think of just now. We'll have to have something to think about for future episodes as well.
Well, we also have to think about what to present next week. But another big thing that's happening this week, so it's not over, that's the World Economic Forum in Davos, where, the topics of conversation there are, one is the, letter by Larry Fink. He manages BlackRock, which is $7 trillion assets under management. So they want to be more environmental conscious, or they will have more funds that only invest in environmentally conscious companies. And then Google CEO Sundar Pichai mentioned that AI will be bigger than, will have more importance for mankind than fire or electricity, which of course Google wants to be an AI. It's, he has to say things which benefit Google, but objectively thinking, the impact fire and electricity had at the time they were launched, AI is not going to have the same effect on humanity, which, I'm not saying AI is not good. I'm saying the impact on humanity was much bigger. The AI is a technology that's built on top of, electricity or internet and other things that are there.
Yeah, I think obviously, you can challenge him to remove his electricity and run his AI, and I think
Yeah.
he's in trouble.
That's good, Arne. Yeah.
I think your point on sustainability is an interesting one, because I think that's truly a tech trend. I'm not and a mega sorry, a tech trend, but also a mega trend. I'm not one of these doomsday people, but I think sustainability is very important. I don't think it's important because people in Davos are talking about it. They are talking about it this year. But I think, the discussion in Davos are very high level and not very tactical. So I don't think a lot of the things they talk about there changes the world. But what I do think is that, sorry?
Yeah, I couldn't hear you. Go ahead.
Yeah, so I think what really changes the world, and this is what I believe in, is entrepreneurs who are talented and really go to solve problems. And I think a lot of the smartest young people today feel very strongly about it, this sustainability, and rightfully so. And I think when the good talent is attracted to solve the right problems, I think there's a potential. And if that's coupled with Larry Fink, even if he's in Davos and talks about it, importance is not what he's talking about in Davos, but the allocation of capital. So if you have like a combination of real problems, talented people, and allocation of capital, you can get something done. And I think these things are coming together. So I think the sustainability trend is going to carry well.
Yeah, I agree. I mean, the younger people are thinking in those terms, and especially Nordics, I would say, are ahead of the US. Yeah, in terms of thinking of sustainability.
Yep.
Yeah. Okay, so let's make 2020 year of sustainability, where people at least are becoming more conscious about climate change and sustainability and consumption.
Absolutely.
Yeah, so on that note, thanks everybody for joining us. We'll see you next week.
Absolutely. Bye-bye.
Okay, bye.